just the quick basics on an IRA. An IRA stands for an individual retirement arrangement, okay? It's controlled through you, that's the I in IRA, individual, not through your workplace, okay? And an IRA stays with you no matter where you go, no matter where you work. There is an annual limit of contribution allowance you can put in every year, and that amount has a tax advantage, okay? So the really important thing to know is there's a difference between a traditional IRA and a Roth IRA, and basically that just tells you where the advantage comes, right? In a traditional IRA, you put the money into that account, and all that money that you put in comes off your taxable income for that year. In other words, it saves you taxes on whatever amount you put in to that IRA for the year, right? Up to the maximum that you're allowed to for the year. When you withdraw the money, presumably decades later after it's been growing inside investments, then you pay tax at ordinary income tax rates when you take the money out, okay? That's how a traditional IRA works, okay? Now in a brokerage account, if you just put that money into investments, you would be using taxable income on the way in, and then the money you took out on the back end would also be taxed. So the traditional IRA is sheltering the taxation on the way in. Now a Roth IRA flips it, okay? When you have a Roth IRA, you put the money in up to the annual limit, but you don't get a current tax break, okay? So you're gonna be putting in money that you pay tax on for that year. There's no tax savings the year you put it in. However, one of the coolest things about the Roth IRA and why it's so wonderful is when you take that money out, there is no tax at all. Hey, I'm Hannah Cole. I'm the owner of Sunlight Tax, and I help creative, self-employed people like you understand their taxes and how to do the hard stuff so you can get back to your amazing work. You can find everything you need at sunlighttax.com.